In this section, we're going to go through the reconciliation process. Make sure you have your notes available so you can fill them in as you go through here. It's not always necessary that everything is up on the screen. Some of your answers may be found in the lecture portion of this also, so be aware of that. The reconciliation process, what this is just making sure that your bank balance that you have in your check register matches what the bank has in your account. And this is very important, especially if you don't have a lot of money in your checking account, is to make sure that there's always money in there and that you don't write a bad check. The reconciliation process. As a depositor, you'll need to review the record of your account that the bank keeps. At regular intervals, usually monthly, the bank will send you a report on the status of your account, and this is known as your bank statement. And again, the bank statement is just a report that is sent to you by the bank that shows you a number of things that we'll cover here. Your bank statement shows all of your transactions and bank fees for the month. Some of the things that your bank statement will show you is the balance at the beginning of the month, all of the checks that you have paid during the month that have a return back to the bank, any ATM transactions, EFT or electronic fund transfers or your special payments that you have set up through your bank, if there's any service charges that are attached to your checking account, and if you had enough money in your account to earn some interest. The last thing it'll show you also is the balance at the end of the month, and this is what we got to double check when we do our reconciliation. This is basically what your bank statement will look like. You have your beginning bank balance. This one is a brand new account, so you start with zero. You deposited or you made some other additions into your accounts. You wrote some checks for a total of $533.89. You got charged some fees, and then you have an ending balance. And then they have a summary of the number of times that you withdrew money and the number of times you deposited. And you can take a look at your activity down here. It shows you the days, check numbers you wrote, how much was paid, and so forth. You can see that there's an asterisk by some of them. And all this means is, you can see right here especially, that there is a break in the sequence of your check numbers. So check number 105 is missing. It might not be back to the bank yet. It also has check card withdrawals. You went to the ATM, got $50. You had an automatic payment of $72 and any other deductions like the service charge right down here for $3. And so that's all the information that's shown on your bank statement, and yours might look a little bit different than this, but basically contains the same type of information. When your bank statement arrives, compare the checks you wrote with those that have been paid by the bank. Banks might not return the actual canceled checks that have been paid. Instead, banks can use substitute checks, which is a digital reproduction of the original paper check. In some cases, banks do not return checks or provide substitute checks unless a customer requests them. So a canceled check is one that you've written, it's gotten back to the bank has paid whatever business that you wrote the check for. There are times when you need to show proof of payment. In most cases, information on the statement will be sufficient to prove payment. If the check showing an endorsement is needed, a substitute check is considered a legal equivalent to the original check. Finding differences. You keep your own record of your checking account, usually in a check register. The bank statement is the bank's record of your account. The document created to show how the two balances were brought into agreement is called the bank reconciliation. Bringing the balances into agreement is known as reconciling the bank statement. Again, reconciling the bank statement is bringing the balances of your checkbook and the bank account into balance or into an agreement. These forms are usually printed on the back side of the bank statement. There are a number of reasons why there is a difference between the bank statement and your checking account balances. There might be outstanding checks. Outstanding checks are the checks that you have written but have not yet come back to the bank. For example, you go to Levers, you write out a check today. That check, it takes time to get back to the bank. Until it gets back to the bank and it is paid to Levers by the bank, it is considered an outstanding check. You may have forgotten to record an ATM or an automatic bill payment. Maybe you went to the ATM in a hurry, you took out some money, and you just forgot to record it. The automatic bill payments, they're easy to forget to record in your register. There might also be a service charge that you didn't know of. Maybe your balance in your checking account got below a certain dollar amount and you were charged a fee. Or maybe you just have a service charge for the privilege of having a checking account. You may also have what are called outstanding deposits. You may have taken your check into the bank this morning. It takes a while for it to process in the bank, and so therefore it's not going to be on your statement right away. So again, an outstanding deposit is one that you have made, but it has not been recorded yet in the bank. You may have earned some interest on your checking account, and until you get your bank statement, you will not know the exact amount of that interest. Or there might be errors in your check register. Maybe you added when you were supposed to subtract or whatever. Usually when there are errors, it's usually the person keeping the check register rather than the bank making the errors. Here's an example of a bank reconciliation. You can see that on one side it shows what the bank has, and then on the right side it shows your balance. And you can see that eventually you want the two numbers to be in balance. And again, it just summarizes your account and the bank account, and we will cover this in a little bit. Next, we're going to go through the reconciliation activity, and I'm going to have you fill out the reconciliation form with what we've learned so far. So make sure you find that sheet in your notes. This is our bank statement that we have received, and we've covered the information that is on this bank statement already. We will use this to balance or reconcile our account. What we do here is we're going to compare the bank statement to our checkbook, and you have that checkbook register with you, and we're going to make sure that there's no mistakes in there. Confirm transactions. We are going to check off in the register for each transaction, and we're going to look for outstanding checks and deposits. So we have our two items that we need, the bank statement and our checkbook register. The first thing we're going to do is take a look at our canceled checks. Remember, canceled checks are the ones that have been paid for by the bank. Our first one is check number 28. You can see that it is in your checkbook register, so therefore we will put a check mark in this column to show that this is a canceled check. It has already cleared the bank and has been paid for. Our next one is check 29. We'll put a check mark there. And again, as we're doing this, we double check that to make sure that our numbers are the same as theirs. Check number 30 for $25.15 is right there. We will put a check mark there. Then we will go through the deposits. We have two deposits listed right here that have been deposited into our account. The first one here, $133.20, is located right there, so we will place a check mark to show that it has been deposited into our account. And the one for $133.20 on the 22nd is right there, and we will place a check mark there. With your bank statement, you'll get a reconciliation form. This form is used to help you find any differences between the statement and the check register. On the left side is your statement column. On the right side is your checkbook column. In your statement column on the left side, you'll have such information as the balance from your statement, deposits not on your statement, your total statement balance, checks not listed on the statement, your total checks, and your statement balance. On your checkbook side of your reconciliation form, you're going to include things like your balance from your checkbook, deposits not in your checkbook, your checkbook balance and deposits, fees not in the checkbook, if you've earned any interest, and the total fees and interest, along with your checkbook balance. So now it's time to reconcile the bank statement by using the reconciliation form. These forms come in a variety of looks, but it basically contains the same information. If you take a look at it, we have all the information here. We have our statement and our checkbook separated basically by a line. You can see on the left side is for your statement balance, on your right side is your checkbook balance. Then we also have, I'm going to just put another line in here, is it's kind of broke up into figuring out what you're missing and then totaling it up on the bottom. Your bank reconciliation form should look like something like this. Okay, when filling out this form, there's a couple of things that you must have, and we've already talked about one of them is your bank statement. And again, this we've already covered, what is included in our bank statement. You also need your check register that also shows you the check marks that you've put in. Remember the check marks here. This means that Cary Sportswear, where you've already received that check back, so it is a canceled check. It's already been paid, along with the Ticket Source, Bell's Department Store. You've also had a couple of deposits already put on your bank statement, and that's why the check marks are listed right here, is that those deposits have been put into your checking account already. Now we're ready to fill out the form. The first thing you need on the form is we're going to work with the side that says statement. And the first thing we're going to take a look at is what is the balance from the statement. Okay, when we go back into our statement, you can see balance this statement is $235.80. So we'll go back here and put $235.80. Next, we're going to take a look at the deposits that are not on the statement. This one right here. The deposit's not on the statement, so when we go back into our check register, we've already taken a look at a couple of things. We can see that this deposit here and this deposit right here have check marks by them, so therefore they have been received by the bank. We do not have any other deposits listed there, and so therefore the bank has received all of our deposits. So we'll go back to our reconciliation form, and we will put a 0 in there because all of our deposits have been accounted for. Since there are no more deposits, we don't have to worry about filling in those lines. And then it says total statement balance and deposits. So we'll take the $235.80 plus 0, and we come up with $235.80. Okay, next we're going to take a look at any checks that are not on the statement. So we're going to go back into our check register. We will take a look. The ones with the check marks by them mean that they are canceled checks. So these are all canceled checks. We can see that we have one check here that does not have a check mark by it. This particular checking account charges a fee for every check they write, so therefore that's why there's 20 cents in all the fees right there. So our outstanding check is for $15.20. So let's go back into our reconciliation form, and we will put checks not on the statement, $15.20. There were no more checks in our check register that did not have a check by it, so therefore we do not have any more checks. If we had more checks, we would just list them on those lines. Then it tells you to total the checks. So we will add up the checks. We only have one, and so therefore our total checks that are outstanding is $15.20. So again, these are outstanding checks. Next, we're going to total it up at the bottom. So what we're going to do is just transfer numbers from the top. So it says total statement balance and deposits. So we will move this number down there. So 235.80. Because remember, this bottom portion is like a summary of it. And then it says total checks. Our total checks is right there. So we will move that number down, 15.20. It tells you to subtract it. So therefore we'll take $235.80 minus $15.20, and we come up with $220.60. So now when you look at this statement balance is what the bank has in your account. $220.60. If you look back into your check register, you can see that that number is different. it says it is $224.60. So there's a number of reasons why that might happen. Okay, now we're going to move over to our checkbook part because we want to make sure that our checkbook balance matches what the bank has. So we're going to take a look at the balance from our checkbook, this one right here, the balance on our checkbook. So we'll go back to our checkbook, and according to our checkbook, our balance is right there, $224.60. So we will put that in there. Next, we're going to list deposits that are not on the statement. When we look at our checkbook register, we only had 2 deposits and they were both on the statement. Right there. They were both on the statement. So therefore, we do not have any outstanding deposits. These would be remember, those are the ones that you've already entered into your checkbook, which means you've taken those deposits to the bank, but the bank hasn't recorded it yet on your bank statement. And the reason why sometimes that happens is maybe you took your check to the bank this morning, and when you got home, the reconciliation form and your bank statement was in your mailbox, so therefore they didn't have time to put it into your account. But going back to that, we didn't have any deposits on our statement that weren't in our checkbook, so we will put a 0 there for now. If we had more than one, we would fill in those blanks. Okay, next we're going to take a look at total checkbook balance and deposits. So we would take $224.60 plus 0, and we get $224.60. Next, we're going to take a look at the fees not in the checkbook. This one right here. So when we look back to our bank statement, you will see that we have a couple of different fees right here. Here are our fees that we're going to take a look at. You will notice that the 20 cents here, here, and here are located in your check register. Those were here, here, and here. So those are already recorded in your check register. If you take a look, there is one more fee here, which is a service charge of $4. And you will notice that it is not in your check register, so you haven't recorded it. The bank has taken it out of your account, but you haven't taken it out of your check register account. So we'll go back into our reconciliation form, and we're going to list the fees not in the checkbook, which was $4. If we had any other types of fees, like credit card fees or whatever, we would also list them there. Since that's the only one that's missing, we will not have to put anything else in those blanks. Also, there was no, when we look back here, we did not have any interest payments. We didn't really make enough money to make some interest. And so therefore, we do not have anything to put in this line. So we could put a 0 there, or we could dash it out. Then we're going to total our fees and our interest. Okay, so we take those and we add them up and we put it down there, which is $4. Next, we're going to total up our right side of our reconciliation form. I kind of have a mess here, but I think you can follow along. Okay, first of all, we're going to take a look at our total checkbook balance and deposits. So we take our total checkbook balance and deposits, and we will move that number down here. We have to take a look at our total fees, or transfer our total fees and interest down. And so this number here will go there. Okay, next you are going to figure out your checkbook balance. You take $224.60 minus $4, and you come up with $220.60. The biggest thing with your reconciliation form is you have to make sure that your statement balance equals your checkbook balance. Those two numbers must be in balance for your reconciliation to be complete. After filling out your reconciliation form and the balances don't match, either you or your bank made an error. You need to check all your calculations. There's room for error in your check register. You need to double check that you entered everything from ATM transactions to automatic payments. And you may have to check with your bank. But first of all, you should do all the calculation and double checking first before you run to your bank for help. After you're done, you need to make some adjustments. You might need to record any maintenance fees and interest earned in your check register. Any of your service charge or interest earned must be recorded in your check register. The register should match your statement balance. Banks don't often make mistakes. If you notice a potential error, make sure you check your files for your receipts. You might have to take it to the bank to get clarification. You need to explain your problem. And then on your future statements, you need to check to see if it has been corrected. Canceled checks are the ones that the banks have paid. Remember, canceled checks have a stamp on it, canceling them out, and it's proof of payment. Keep this for future reference in case somebody comes back and wonders if you made a payment. You can use the canceled check or the substitute check as proof of payment. Well, you made it through this lesson and hope everything is going well with you.